European energy holidays are in full swing and are probably going to continue for the next couple of weeks. But still, a lot of the TTF, NBP, and other European energy markets are drifting lower in the absence of any new news. My name is Marcello Kolex, and today we are going to talk about how the TTF, NBP, German power, as well as the EUAs are all set up for more losses at the start of this week. I'll walk you through some head and shoulders chart patterns. I'll show you what to do in a sideways range when the liquidity is low. As you know, we will always start with a disclaimer. Nothing you see here is actual trading advice. It is just my humble opinions. And we are starting out the week rather bearish. So this is what's available to our Clever Markets clients this morning as part of the dashboard. We see that a lot of the neutral stances on the TTF and NBP and the German power markets have now given way to real bearishness. And we'll talk about the triggers that turned the market bearish. But first, let's have a look at the TTF sentiment poll. So this is what we had last week, and this is what we are starting out with this morning. So you can see last week we still had a lot of bullish residue opinions in the market. I think it was the second week in a row that we had dominating bulls. Before that, we had mostly a sideways market. Now you can see at the start of this week, it's all giving way for more bearishness. 51.5% of all those who have voted thought that the market this week, or the TTF, is more likely to go down. Now, how does all of this fit together with the charts themselves? Well, I'm making myself very, very small, and we are having a look at the TTF and the NBP front month, TTF and NBP front season. We have a look at the German power markets. No, that is EUAs, German power markets, Henry Hub, and Brent. And from all these markets, we kind of understand where the bearishness is coming from, where the preceding bullishness and neutrality is coming from, right? So here on the daily charts, we see that, yeah, we did have some bullishness. So the market was kind of aligned with that. As soon as we started to see some hesitation towards the peak, a lot of the bulls turned towards neutrality. Especially on the EUAs, which is not what the poll is about. So the poll is only covering the TTF. Other markets are a little bit lagging behind, right? So we see that the EUAs, they are still reasonably neutral. Nothing is happening here. We are seeing that the German power markets have been more neutral for longer, for quite some time, but we now broke lower. And here on the Henry Hub, we are just now topping out. And of course, no news on the Brent, where nothing is really happening at all, while the USA is turning into a fascist dictatorship. Okay, on the TTF front month, we are starting as always with the weekly chart. Here, just a quick look back of what we try to do, right? The weekly chart is still reasonably bullish, and I'll tell you a little bit more about that later. So now we are on the bullish side of the market, and that is simply this: after this up leg, we had a downside swing, and we are now continuing higher. So this was the setup. Now you might be wondering, hey Marcello, we have been moving lower here. What's going on? What's going on here? Maybe this here is the weekly charts downtrend. So this is where thoughts can split a little bit, but I want to say, just as soon as we start seeing real swings happening, that might be the right time frame. If there's ever any confusion, I encourage you to look at the Clever Markets workbook that I'm working on right now. So it's not published yet. This is where we start looking, okay, so what chart are we looking at? We are looking at the weekly chart. So that means we are kind of looking for the broad trend, looking months and months and months ahead. Not quite years, not quite weeks, but a few months. So right now you can see this on page 95 out of 136. Probably it's going to be 200 pages when it's done. Now for that, if you're looking at a couple of months, well, this is April. In June, we topped out, and we are now in July. So this kind of makes sense. However, this is just a little bit of a red herring, whether or not we define this as a downtrend or this as an uptrend. The real question is what's going to happen in the next couple of weeks. Well, what we see here is that the market didn't really move much. And what's also important is that we are working with FIB extension. So you can see here, I measured this down leg. After this up move, we are now applying this length towards here, and then we just see how low it can go. So overall, you can see we have created a downside target at 13 euros 91, so 14 euros. I want to make very, very clear, just because this level exists doesn't mean it will be hit anytime soon. So that's why this is not a support level. Personally, I don't believe that the market will go there, and that this here exists is just a mathematical quirk, and I do not believe that this is relevant, just in case you're trying to draw this on yourself, okay? Right now, I think we are, first of all, struggling more with the 30 range, maybe the mid-20s. That could be possible. But for now, we are focusing on the daily chart, which is where the decisions are being made. So one thing that I definitely want to point out, if we zoom in here, the market was moving in a reasonably tight range last week. I think we marked out the 34 point something and the 36.32. And while the market was pushing sideways within that range, the market was neutral. Now that we've broken below that, we are turning bearish. However, what is also super important is that we are not just looking at the market moving itself, but you're also looking at confirmation from other tools. For example, my favorite oscillator is the slow stochastic, and we see that this topped out in neutral territory and we are now pushing lower. So overall we are making, look at this broad thing, right? We are making lower peaks and lower troughs. So overall the market is more inclined to move lower eventually. We are also looking at the DMI, and you see me often talk about the DMI. So we have three lines here. This white line is called the ADX, the average directional index. And if that is below 20, you can see right now it's at 11, so well below 20, then the market is not trending. That also means we ignore the rest of the tool. So this here, the ADX is simply just a switch. Is the market moving sideways or is it moving up or down? If this here is above 20, then we make the decision, okay, which one is above the other? Is the red line above the green line? Then we are bearish. If the green line is above the red line, then we are bullish. So right now, we shouldn't even be using this tool. But you can see that the market seems to be bottoming out. So this means that the market might be finding a direction very soon. This can be up or down. And in this case, it might be down. Okay, now the next thing I want to look at is the 8 and 12 exponential moving average. And these are both pointing lower. So they have topped out. So that's also being in favor of the bears. Now, the only thing that's worrying me a little bit is the MACD, the moving average convergence divergence, which is our momentum tool, and it's still sideways. So usually we want to see the MACD move up or down, not sideways. Sideways means the market isn't really going anywhere. And this is why some traders might be a little bit hesitant to jump on this down leg here. Makes complete sense. But overall, I think like the next big hurdle to take is the 32.64. And I think there's a chance for us to make it below that. And you can see I am working with this FIB extension, which is a different one than the one we saw on the daily chart, where we are going from the 23rd of June. We are measuring the distance to the 30th of June, right? And after the correction, we are then creating this down leg here, because we think that this here is the same length as this is going to be, which is putting us at 26.52 euros per megawatt hour. I think this is less crazy, but for now we have to go through these 32.64 and the 30.26 support levels. Now, one thing that has been new is the channel on the hourly chart. And here we were previously working already with the descending channel. I think a couple of days ago, I think we drew it in here. So we are trying to draw in a channel like this. We noticed very quickly that, we pushed higher and then we moved back in. And now we are scraping along this channel boundary. So what do? We adjust the channel, right? And by adjusting the channel, there is no harm in that. So don't worry, you can and you are encouraged to adjust the lines that you are drawing, because all that the lines are serving us, okay? So we use the lines in order to get an idea of where the market might be going next, to guide the market. It's not that they have to stay on there. So if you see that the market is disrespecting the lines, just redraw them. We are not married to the lines here, okay? Now you can see if you zoom in that I'm working with two types of fib levels. I'm working with fib extensions and fib retracements. So for the fib extensions, I'm looking at a downside target within the channel. So after this down leg, we have a correction, and now we expect that the length of this down leg is replicated here. So the 100% extension is very close at a 33.16. You can see we're almost there, right? So this is the initial downside target. Doesn't mean it's the last bit. This doesn't mean the market only goes until here. And it can go to the 127.2% fib extension at 32.6 euros per megawatt hour, right? So this is possible. Now you can see on top of the fib extension, we also have fib retracement. 0 down here, 100 up there. Why did we do that? That is simply because there's a chance of the market pushing higher. So you can see last week we ended with a hammer candle, and the hammer candle is usually showing us that the market tried to push lower one last time but failed, and especially at the end of a downtrend, a long lower wick, a small body and a very small upper wick is showing us that the market is ready to bounce potentially. But this always must be accompanied by a bullish oscillator signal. And you can see nothing is happening. We are still in oversold territory. Only a move above the 20, above the oversold territory, would give us a bullish signal. You can see, like here, this here was a bullish signal. This here was a bearish signal, I mean, a few bearish signals, right? So nothing here yet. So that's why this hammer candle is tentative, and honestly I don't really think it will play out. It wasn't confirmed, but I'm still marking out the borders of it. 33.41. A move below that would invalidate the bullish setup and we would simply continue lower. I think that's more likely. And I marked out the 33.84, which is the upper end of the candle, the hammer candle, and is also coinciding with a 23.6% fib retracement. So this is a double whammy. A move above the 23.6% fib retracement usually kicks off an up leg. A move above the hammer high usually kicks off an up leg. So this is like a super important level. So this morning I believe that we might be hovering within this range a little bit. I don't think we'll make it higher. If we do, we will probably make it towards the 61.8% fib extension, which is how far fib extensions usually go, or corrective legs usually go. In our case, 34.58. This coincides with the channel boundary. So this would make a lot of sense, right? We are then seeing that the market continues to swing. So this would be the extent of a corrective up leg for Monday at least. If we push a little bit sideways and then below 33.41, I think that the bears will easily continue 33.16 and below. Now, why am I more bearish inclined overall, even with the correction? Even if we correct higher, I still think that the bears will take a charge. Look at this. The DMI, the directional movement indicator, is this here, right? And part of the DMI is the ADX, the average directional index, and we are well above 20. We are 24. We see that red is a lot above green, so it means the bears are really in charge. We see that the MACD is making lower lows and lower highs. We are below 20. The MACD line is below the signal line, so all of this is showing us more bearishness as well. We also see that the 8 and 12 exponential moving averages are pointing lower. So everything is aligned with more bearishness, even if we have a correction. And this fully aligns with textbook definitions. Here I'm showing you the Clever Markets handbook once again. So this is how we combine tools with the market to understand if the market is correcting or reversing. So let me zoom in on this example. So here we have an uptrend. Of course, right now we have a downtrend. So if we start seeing that the market is swinging higher, right? In our case, it's swinging lower. We see the start of a corrective down leg. Then we want to do a few things. So if we see that the trend and momentum tools are still aligned with the major direction, but we see that an oscillator gave us a bearish signal and then maybe a bullish signal, right? So that means that after the correction, we are more likely to continue higher. In comparison, if we start seeing that the market is moving down, we are wondering, is this here like a correction or is it a full-on trend reversal, right? But if we start seeing that the trend and momentum tools have been diverging, so divergence means prices going up, tools are going down, and then we get a bearish signal, then there's more an indication of the market fully declining essentially. So let's have a look at this. So we have like a how to build a methodology for speculative traders, pinpointing the start of a trend reversal. Right, first we see a break past higher highs and higher lows. We start making lower lows and lower highs. Maybe we are pushing beyond a trend line or a channel. We start seeing that an oscillator is giving us a bearish signal. We are trying to estimate the depth of a corrective move. We are looking for how far the correction can go, usually to the 61.8% Fib retracement, at which point the tools should be picking up again. So what's happening right now here in reverse is exactly that, right? So the market is moving lower. Is it confirmed by a bullish oscillator signal? No. So that means right now, with the data available to us at 5 a.m. Singapore time on a Monday morning, this bullish setup will continue. Is not a bullish setup, it will just continue lower. If we still bounce, we put on the Fib retracement as shown on the workbook, right? How far can it go? Well, probably towards the 61.8% Fib retracement, which also coincides with the channel. So technical analysis is really just a set of rules that are like super useful. If we get a correction, it's just a corrective move in an underlying downtrend. Everyone, thank you very much. This was the TTF front month. If you do have any questions, simply let me know. You can find me on LinkedIn. You know my email, hello@clevermarkets.com as well. And just get in touch there. Everyone, have a good start to the week. See you around and bye-bye.